Friday, April 19th, market analysis, Stan Ehrlich, and what an evening or nighttime S&P 500 E-mini market we have had. Well, something happened overnight, and I'm believing it was the Israeli situation, caused the E-mini to drop like a rock in a short period of time, an hour or two. Could have been a lot faster than that, but a lot of Americans are asleep or close to it. And we came down all the way to 49.65 or so. Yeah, good enough, which is very close to my minimum downside expectation for the last few weeks. But I didn't think most of it was going to happen in 5 days. The first big down day was on April 15th, breaking below most of the support levels that we had had since the trading range started around, I don't know, as early as February 23. All of this material in here was pretty much support, and I've outlined a variety of levels. The most important and the highest one was not most important. Highest one was at 51.29 or so. It got broken and started this decline, which is every single day so far. And then we got oversold. And then we got oversold more. And then we got oversold more. And today we got oversold even more. But a support area is now in the regular trading hours showing up as being somewhat important. But we already put a hole in it last night. So really, it's gone. I don't think it's going to stay that way. But I do have a problem getting down to my major objective, finally, support area at 49.04, call it 49 on the E-mini immediately, although it could happen. My problem is we got down to as low as about 14 on the RSI, which is pretty darn low. The definite implication, if those two words fit, the implication is a rally, a bounce. Do I qualify from the low of last night to the high on the bounce, the rally? And I honestly have to do that. Let's take a look at the short-term chart to explain a little bit more. Now I'm going to show you this 30-minute chart going back, way back to the beginning of the year, literally December 29th or something. So this is the last big move up on a 30-minute chart, hour by half hour, and the various overbought conditions it got to at the stair stepping its way up a couple of months, last 3-4 months. Sort of double topped out, not the most perfect example of a double top, and it's very small over a week, but it did. And I remember we got a sell signal in the middle of it, but that signal itself didn't work, but it was telling us the market's trying to top out. Down we start to come. Now the highs are becoming to be lower than each other, lower and lower and lower and faster. And the lows are lower and lower and faster in the last week or so. And here we are. This last move last night looks like exhaustion weakness. Real big, real fast, and extremely substantial, blowing out any support area that was in its way and stopping it kind of like no man's land. And let's spread it out a little bit so we can see some more detail here. Fine. California time, 2000 hours, give or take a half hour. It bottomed out at 49.63-ish, came all the way back to a new high for the session since yesterday afternoon, and is dropping off again. But it's bottoming out at the old support level, so it's paying attention to it now. But again, we put a hole in it yesterday afternoon, yesterday evening. So it's not as important as it used to be. This bounce we're having at the moment could carry a little more, maybe like it just did a few hours ago, stop again at the resistance area, which is 50.59, call it 50.60, 5,060, and turn down again. So my major expectation support level. I just pulled into view with the very heavily colored support zone is 4904, call it 4900, is now not so darn far away from the previous low of 4963. We have covered almost all the ground I wanted to cover in only mostly 5 days, a lot faster than I expected. I thought it was going to take from somewhere between 1 and 2 months, but it already happened like 80% of it in 5 days. Yikes. What does that mean? Well, the implication is the support area may not hold if I have that much more time left. You know something? The time is not that important. It's the way the market moves and how much time, but mostly the way it moves. So I think I'm still going to be right about that support area. We'll find out sooner or later, and maybe at the rate it's moving sooner. But next chart, the spider doesn't have those long 23 out of 24-hour trading hours. It started at 6:30 in the morning today. So it only came down to 495. And now it's bouncing back up some. No gaps, oversold, not any particularly important support level close at hand. So we'll see what the spider does. But I'm more importantly watching the E-mini because obviously it's a almost 24-hour representation of the world's financial response. Investors, traders, scalpers, whatever, response to what's happening around the world. Every moment the world's getting smaller. Next chart. Spider, 5-minute. Yeah, don't see anything dramatically bullish here whatsoever. And I'm not going to be surprised if the spider doesn't make lower lows by the end of the day. And frankly, I wouldn't be surprised if the E-mini does the same thing, although that's more of a stretch. Next, we got the QQQs. Start 6:30 California time. We came down, did break a little support area, got marked, but we're currently trading back up above it again a little bit. But now my finally downside objective off of this rolling head and shoulder top certainly is a unusual example of the formation, but all the body parts are there. So I've got to call it a relatively flat rolling kind of a top head and shoulder. I don't think I've seen one of these kinds of things for maybe forever, but for decades, if I can even remember seeing it. But it works. The neckline, broken, big down move, breakout, classic, closed on its butt. Next day, a little follow through. Next day, big follow through. And that was only Wednesday of this week. And then another big down day or medium size yesterday. And boom, we're past the minimum downside objective. End of story. Pattern worked, done. Now the support level is not much further down than today's lows on the QQQs. NASDAQ QQQ 1 minute. This does not look like it's stopping the decline. It looks like a relatively normal bounce taking place over what, less than a half an hour. Classic. Next, we're going to the NASDAQ futures contract, June futures. Broke all of the nearby support levels. The only significant one left is my big zone down here. And I should make it a little bit more opaque so that you can see it a little bit better. There we go. And that is my final downside objective. And I've been saying it's going to take 1 to 2 months. No particular change of opinion, although we are further away from that support area than the other indexes. So maybe it won't get reached. Maybe the other indexes will go to the bottom of a wide support area while the Qs go to the top, or some combination thereof. Next chart, NASDAQ futures contract almost made, and now this one has the long trading hours, so it almost made a new low relative to last night's at 2000 hours low. and it's bouncing a little. I don't think this is over, people. There's a very good chance Friday, you got to wait a whole weekend. You know, they're battling it out in the Middle East. Much worse things can happen over the weekend, maybe. And I'm not planting seeds here. I'm just trying to be realistic. I don't know. They could sink some more before the close, obviously based on more fear of the weekend. Next, we're going to bonds. No, I'm sorry. We're going to the Dow Jones futures. Sorry. YM has held up best, the Dow futures. It wiped out the only support level I've got drawn here at the moment. That went bye-bye. Here is, and that's, wow, okay. I'm drawing in the same support level in the YM that I've drawn in on the other charts, and we have already gotten down to it and actually broke it. And that was the support area from approximately the middle of December to the middle of January, and there it is. Looks like it's relevant. Looks like it's been tested already earlier this week. And now, wow, broken. Next one down, going to the high that we made back in July of last year. Yep, that's what I got to use. 3,700 or a hair under, 37,000 or a hair under for the DIA futures. Okay, bonds. The bottom of the channel now seems relevant. It dropped down to it and through it like Monday. Stayed mostly below it, but in the support area Tuesday. Wednesday, half in, half out, not very decisive. Thursday, coming back a bit, and today 100% above the bottom of the channel, which got cracked because we broke below it a little bit, but now sitting right at the bottom of support and coincidentally the bottom of the channel simultaneously, we could start to rally a little. And that would go along with the possibility of oversold exhaustion weakness break in the indexes for some better bounce than I was referring to a few minutes ago, looking only at the indexes. So this influences me to be a little bit more general about a small bounce for a day or two. Let's call it Monday, Tuesday, Wednesday. Maybe nothing dramatic happens over the weekend and we feel a little better about that. I don't know. That could happen. Do I think it's going to make another set of new lows? Yes. Maybe 1 or 2, 3 weeks from now. Same thing for the stock market indexes. Notes, 10-year notes, same kind of comment. Don't really need to spend too much time on this. The double top formation did work. The minimum downside objective was fulfilled at the end of last week. And we're now just simply zigzagging our way down to maybe a test of the lowest lows back in October. Next chart, crude. Big trading range today. The rally obviously has not held. We're back down to just a slight bit higher. I think it's going to make new lows again. Next, natural gas. Slight bit more rally. We've been stair-stepping our way down. We didn't even get oversold on the last dip down Tuesday. And it's coming up in a very normal, standard way during a bear trend. I think we're going to see new lows soon. Heating oil. We do have the potential of a bullish engulfing on heating oil today. And I have to watch this very carefully to see if this continues to be a bullish engulfing. It totally depends upon the close. The close needs to be higher than the previous day's close, period. And if that's true at the end of the day, you've got a green bullish ER buy signal that I hope works out really well. It is in support. That's a good point. And it has to be oversold to turn out to be green. But if it closes lower than Thursday's close, yesterday's close, no green, no signal, and we could keep slipping. Next chart, gold. Second highest high for the move up. Yeah, I know, Michael. I owe you. So, no reversal, keeps climbing. Wow. But look what's happening to silver. We have an outside trading day in silver. We're overbought. Right now, it's way up here, a little bit above yesterday's high, let alone yesterday's close. All it has to do is slip below 28.695, which is right there, which is not much lower than where it is. And this yellow will turn red for a bearish engulfing sell signal, giving me hope that Michael is not going to get my dollar. And maybe it'll crash quickly before Monday. But I think I'm going to owe him a dollar. Anyway, looking good. Bullish still, on the borderline of a sell signal. Copper, platinum first. Platinum does have an outside down day, and it was overbought within the allotted number of past days. So this is a legitimate sell signal right now. I normally don't like sell signals that are already down from the highest high that much, but it fills the obligation of my code. So I got to say, it's an official sell signal. I'm just a little uncomfortable with selling it short when the RSI is already down below 40. And when it gets down to 30, you're down to the old Wells Wilder oversold level. Mine is 25 for official. My adjustments among many, or a few anyway. So down we go more to the 900 to the 880 levels. I expect new signal today, now, next. High grade. Man, oh man, I don't know what's happening, but high grade, one of a few different markets that won't quit. Way in the new high ground, very overbought, almost 80 again. I have to say it, and you know what I'm going to say. All the obligations to the upside have been met. The head and shoulder bottom worked, past tense, including the small head and shoulder, about a month and a half, 2 months, which is kind of a normal size, maybe normal to small, worked. Bingo. Big one worked, little one's inside the big one, done. What are we doing? Screaming higher. I have to say we're about to top out. We could open lower on Monday and start a big move down. We don't have to have an ER sell signal, although they're great when they occur on the high and low, which you've seen many, many, many of. I think it's about to top out. Next, soybeans, now changing to the July futures contract. And what do we have here? Oh my. Okay. Double bottom with the first low on February 29th. Today's low is a new low for the move down, but it's so close to the February 29th low that it certainly looks like a double bottom forming. Plus, we have a bullish engulfing ER buy signal, I hope, smack dab on the low of a broad double bottom, the beginning of a bull move, maybe, I hope. We don't know until weeks from now. On the way up, what do I need? Obviously, closing prices above recent rally highs. The first one that's going to be real important is above 1208. The next one after that is pretty much closing above 1226. And the final upside breakout on the pattern is 1241, we'll call it. If that's true, the minimum upside objective on this possible double bottom that's in the process of starting right now, today, is going to be up to 1340. Not a bad move at all. As of current quotes, 1167. We need to close higher than yesterday's close to keep green. We don't close below the yellow support line, the low back in February 29th. That is the killer of this formation, if I'm right to begin with. So that's why I'm spending so much time on beans today. It is now the first time beans are giving me hope about a bull move with some evidence it may be beginning. Next chart, soybean oil. We had a buy signal that was extremely good back on March 1st, but today and yesterday are the first 2 days where we've made lower lows for the whole trend. But hey, we're oversold and we're in a support area. Even though we've got little bit lower lows than last March 1st, it still could be a double bottom and still could turn up. Oversold support area. I just don't have any buy signal at the moment. If it rallies enough before the close, yeah, I'll get a green buy signal and it will be great, correlating with the beans that we've got at the moment. And hopefully by the end of the day also, soybean meal, not the same picture. It's already done it. The soybean meal came down for a potential double bottom on April 3rd. It did turn around at support. It has rallied almost to the breakout level of the double bottom, which I'm putting a line on the screen for you guys right now. So all we have to do is close above 346, call it 347. And I've got an upside breakout that should generate a move up to approximately 370 plus. Okay, hey, I've got things that look bullish in the grains now that I couldn't say quite so globally about grain before, and this is soybean meal. All right, corn, wheat, corn. The low back on February 26th, bullish engulfing ER buy signal, just like we could be happening today in beans. Worked, great trade, 2 weeks up, gone. The net result is a little bit of a dip sideways to the current day. What's important about now? A couple of weeks ago, it came down to, on April 2nd, a low and held. Minor support, no big deal. Had a little bounce and came down yesterday to the same levels and is holding. Support up above yesterday's high at the moment, almost a new high for 3 days. It's a start. I want it to close above this high. Let's call it 450, a little below 450, ASAP. And then we need to close above the high on March 28th for a breakout of not really a double bottom, but a new high for an extended period of time since late February. Then we'll have 2 months behind us in new highs. The stair-stepping higher high, higher low process begins. But it hasn't done that yet. It's just a relatively strong day. And let's see it break those highs and then finally the upside breakout. And this is corn. Wheat, also a strong up day, but similar to corn, not exactly the same. Let's see it make new highs above the high on April 5th. And then I'll be a lot more confident that this is sort of a double bottom. Not really good enough to put in a textbook, for example, but still the process of making higher lows and then higher highs may start to develop if we can get a good enough rally. Okay, cattle and hogs. Live cattle. Nothing happening. Really don't have much to say, I'm sorry. Hogs, our big sell signal occurring on April 10th, has gone down for 2 or 3 days very nicely immediately after the sell signal. So we know that trade worked out pretty good. It held yesterday at the previous lows only a few days earlier, and we're getting a little bounce. I don't think this is going to go anywhere. Frankly, I think it's probably going to make lower lows and close below 101. Call it a few days from now. That's my expectation for lean hogs. And we're going to go to TradeStation to look at their ICE charts for a moment. We have at the moment the possibility of a bullish and bearish engulfing, but it's not good at the moment because we can see the current quote is higher than yesterday's close by a very, very small amount. Everything else is in place. All we have to do to keep this red on the close is to close below yesterday's close, period. Then we will have an outside down day, bearish engulfing within the number of days after the last overbought condition, which was 5 days ago, barely in time to give us a signal. So I need a lower close than yesterday, and I'm on my way down more because of our confirmed ER sell signal. And of course, I hope it works. Next, and I should have blown it up full screen, sorry. Coffee, overbought like crazy. First time in a few days, we've seen a low lower than the previous day. Still higher by a little bit. Are we topping out? Maybe. I can't tell. Don't have a signal. I wanted one. I certainly deserved one, but we didn't get it. The RSI got up to 97. That is incredible. I probably can't find, going back years, another 97 in many different markets. That's how unbelievably overbought that is. So it was a foregone conclusion that we were coming very soon in time and probably very soon in price, moving up and down to a turning point. So all I got is a lower high and a lower low, and currently a slightly higher quote on the coffee chart. We may have topped out. I'm not convinced. Next, RBOB, New York Natural Gas, could have 1, 2, 3, 4, also a bearish engulfing if it closes below the previous day's lows. It's also testing the channel, which I talked about for a few days. So that's done. But if I get a red bearish engulfing ER sell signal by the end of the day, I think it's going to crash a lot more. And that would be at first 2.6, second 2.4, and then below. Next, OJ. What can I say? Damn things in this still pennant formation, can't break out, wait for a breakout. Next, cocoa. Screaming bull market, won't quit. My broadening top formation is just getting too convoluted, killing the formation. Sorry about that. I thought I had one. I told you they were very rare. And now this is too much strength. It's not that. All I can say is possible divergence, new high in price, not a new high in the indicator, and possibly turning down soon, very soon, but that's the best I can do. And we're back to sugar, new lows for quite a long time period. In fact, about a year. A bounce because of the oversold. I think it's going to stop bouncing. Maybe where it is. Maybe up to 20 and a half. And maybe even a hair higher. But 20 and a half looks awfully interesting. And this is why. Whoop, 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 come on. Oh, fudge. Hey, come on. I'm supposed to get a line starting here. And for some reason, it's being temperamental. Okay. I don't know. It's not cooperating. But I'm going to draw a line right where my horizontal cursor line is. And that looks interesting as far as a next support level on the downside. This looks interesting from a resistance level where it hit yesterday. And yep, I'm having a problem. Oh, I'm sorry. You know something? I thought I was in Ninja Trader, and I'm not. I'm in TradeStation. I apologize. my error. My bad. So yeah, it still looks interesting. Resistance. That's why this little zone looks interesting. That low and that low. Okay. Rally, yes. Going up a lot? No. Making new lows after that? Yes. Finally, last chart, cotton, huge support, did stop the decline yesterday on the way down. I've got two, you could call it basically three in terms of this month and a half, 2 months worth of sideways support levels. I think this stands a chance of rallying pretty good. The support is extremely profound. Yep. Okay, we're about to bounce pretty good in my opinion. And we're back to the coffee. You guys have a great weekend. Profitable trading to you. Checking on the E-mini quickly before we depart, because everybody loves the E-mini. 1 minute, starting to come down again. This is not the 1 minute, it's the 30-minute. Looking at the detail, 1 minute. Yep, same comment. Have a great weekend.